Hi, this is this week's video analysis for Orbex.com. It's the week 26th of November 2018. I'm Ian Coleman. I'm going to be your host for the next 15 to 20 minutes. We're going to be covering the dollar index and the FX majors, highlighting what formations we're seeing this week and also our bespoke support and resistance levels. And basically talking about what chart or trade setups we're looking for the next 5 days. So we're going to start with the dollar index. Here we can see, this is the weekly chart, we can see a bearish Elliott wave count to the downside, then quite an impulsive move higher, but not last week but the week before, week 12th of November, we posted a bearish engulfing candle or an inverted hammer, very close to the 61.8% pullback level at 97.86. Now, although we have seen a bounce or a correction higher in the index last week, if we break down to a shorter time frame, this is what we're basically looking to happen. So we're looking for a bearish head and shoulders. So a left shoulder here, head here, and then this projected right shoulder, and then this trend line support. So basically, we need to see a break of the support, which is around about 96.24, to project the index lower. But we've got a few other factors that make it quite beneficial to sell into rallies in the dollar next week. So impulse moves to the downside to start with. Remember, we've got that bearish engulfing candle, and then we've got an impulse move higher, corrective, and then quite an impulse move higher. Now, the left shoulder, so the projected right shoulder, is also the same level as an ABCD formation, which comes in around about 97.18, 97.20 is this previous swing high. It's also between the 61.8 and 78.6% pullback level. So we're looking for dollar gains to be limited at the beginning of next week, and we're going to reflect that bias back onto the dollar majors to show basically what we're looking at. So euro dollar, the long-term bias is still to the downside. We've got this wedge breakout, and actually the wedge target's down here, which is at 105.73. But opposite to the dollar index, Elliott wave moved to the downside, 5-wave count, bullish engulfing candle, close to the 61.8% pullback level. Now if we go to this chart, and this chart is basically what we've been shown on our intraday plays at Signal Center last week. Here's the reverse head and shoulder. So left shoulder, head, 5-wave count to the upside, and then this choppy 3-wave count to the downside. Right shoulder projected at 113.02, 113.13 is the 61.8% pullback level. So we are looking at buying into dips. That move to the downside is looking very close to exhaustion. Sterling dollar, not as easy to forecast, obviously, with the turmoil in the British government, Brexit at the moment. We're getting sharp moves in both directions. Still looking to buy dips in this currency pair because we've got this DMARC 13. Now, a DMARC 13 normally highlights at the end of a trend. It's actually on the daily chart. Unfortunately, the projected stop is quite low. It's 124.14 if you're going to play DMARC just by the DMARC rules. So to call a medium-term buy at the moment would be a bit, well, the risk reward would be very poor. If we do break this channel formation to the downside, then we've got this trendline support here at 127.38. Really needs to break out of this channel to get a projected move to the upside. What we do like at the moment is that we've got our bespoke support, resistance levels very close to the Fibonacci resistance levels. So we've got 130.54, 130.63 is our resistance, and then we've got 132.58 and 132.27. So the bias is bullish, and as long as we don't make a new low, then we will be looking at buying into dips. But as you saw last week, a lot of the confidence levels were very low, just basically on that political turmoil. Dollar Swiss, aggressive, impulsive move lower in 5 waves. We've now deemed to be in a corrective move to the upside. Support early on Monday is at 99.54. We've got trendline resistance at 100.08. Really, we could see a prolonged correction in this pair, and I think this, even if we get a move lower from this trend line, then I think this will be A, B, C, and then CD, and perhaps a move up to this 61.8% pullback level. We've actually got our medium-term trigger at the moment at 100.50, but we may look to adjust that at the beginning of next week. So again, looking to sell into dollar rallies, but the move to the upside could be a bit more aggressive than the move to the downside in euro dollar. Dollar yen, and again we've got this wedge breakout. Measure move targets 111.38. 5 wave completion, so really looking for a corrective move higher. An AB equals CD formation is here, which is 113.55, very close to the 61.8% pullback level at 113.48. So this is the prime area to continue with the short bias in dollar yen next week. We've got trend lined resistance coming in at 113.32. Dollar CAD, quite a strange one. Dollar CAD, we have reacted at the 261.8% extension level. We can see 5 waves to the downside. Very choppy price action late on Friday. Bespoke support early next week is at 132.24. We're looking to sell into rallies, so we're not looking to buy into any sort of dip. If we look back here, then we've got the previous swing high up around these levels, 132.63. If we project that onto this channel, then we've got a confluence area. So we've got that previous swing high, we've got a channel top, we've got a 61.8% pullback level. So this is a prime area to get short. However, next week the sell-off could be not limited, but we do have bespoke support at 131 the figure. So I'm just wondering whether or not, if we just make this bigger, whether or not we might move down to that area, and then perhaps form a head and shoulders. So move down, hit the support level, then move up again to form a right shoulder. So at the moment we're looking to sell into rallies, but we're very wary of this support down here at 131 the figure. Aussie dollar is bullish on a weekly basis. We've got a 5 wave count to the upside on this 4-hour chart. The move lower is mixed and volatile. A perfect ABCD formation takes us here to the 61.8% pullback level at 71.42. As long as we get a weekly close above 71.98, then the medium-term bias remains bullish for Aussie dollar. And I'm wondering whether or not we might just see a short corrective wave at the beginning of next week. But like I said, this is prime 71.42, and we'll be buying dips down towards that level next week. Euro sterling, really hard to analyze, obviously, with that sterling factor embedded in this cross. At the beginning of next week, 88.13 is bespoke support. Bespoke resistance is at 89.60. I think we'll be lucky to get rallies, but like I said, you know, the sterling beast is hard to predict at the moment. So yes, support 88.13, resistance 89.59. We've seen no real topping formation. The only thing that really highlights that the move lower could be corrected is this Elliott wave, five wave bullish count to the upside. Euro yen, bullish 5 wave count to the upside. Is this going to be a bigger correction? Now, if we're thinking about dollar yen, the scope for a move to the upside in dollar yen, if we're looking at euro dollar, then limited downside. So really, just using correlation, we should be buying into dips in euro yen, but we've got nothing really in the way of support down here, and a full ABCD formation would actually make a double bottom at 126.63. So at the moment we will be monitoring price action very early next week. We haven't got a medium-term call on this currency cross. At the moment we've got to sell into rallies basically. 128.45 is our bespoke resistance, and that would be the intraday play. If we did see a move lower, then I think if we got below this previous swing low, then I do believe that the 78.6% pullback level will probably hold back any sellers in euro yen, and then we'll move higher with that bullish euro bias next week. Okay, I hope you found that educational, and we'll speak to you again next week. Many thanks.